As a small business owner, you're the driving force behind your company's success. You wear many hats: CEO, the visionary charting the course; marketer, crafting the message that resonates with your audience; bookkeeper, meticulously managing the finances. With so much on your plate, it's easy to overlook your tax obligations, but ignoring them can have serious consequences. Think of the IRS as a silent partner, a stakeholder in your business's success, whether you like it or not. They don't help run your business, offering advice or support, but they expect their share of the profits, and they expect it on time, every time. Staying on top of quarterly estimated tax payments isn't just a legal requirement to avoid penalties, it's absolutely essential for maintaining financial stability and predictability in your business. Timely payments help you avoid those nasty surprise tax bills that can cripple your cash flow and the costly penalties that come with underpayment, keeping your cash flow predictable and allowing you to plan for growth and investment. The second quarter payment, a critical deadline due in mid-June, looms large for many business owners. This payment covers income earned from April 1st to May 31st, a period that often represents peak activity for numerous businesses. Indeed, it's a busy time for many businesses, making it easy to let tax obligations slip through the cracks. Missing this crucial deadline can trigger a cascade of negative consequences, including penalties and interest charges, quickly turning what could have been a manageable bill into a significant financial burden that weighs down your business. By preparing in advance, staying organized, and understanding your obligations, you protect your business from unnecessary financial strain and maintain a positive, compliant relationship with the IRS, fostering trust and avoiding potential audits. In this guide, we'll break down exactly why these payments matter, providing clear explanations and real-world examples. We'll show you how to determine if you owe estimated taxes, and provide step-by-step instructions on how to accurately calculate and submit your payment, ensuring compliance and avoiding errors. We'll also share practical tips and strategies to help you stay organized throughout the year, maintain accurate records, and avoid common pitfalls that often trip up small business owners. Mastering your tax obligations not only ensures compliance but also gives you greater control over your finances and provides invaluable peace of mind as a business owner, allowing you to focus on growth and innovation. The U.S. tax system operates on a pay-as-you-go basis. It's a fundamental aspect of how the government collects revenue to fund essential services and programs. Understanding this system is crucial for every business owner. This means you're required to pay taxes as you earn income throughout the year, not just in one lump sum at the end of the tax year. This ensures a steady stream of revenue for the government and helps taxpayers avoid a potentially overwhelming tax burden later on. For employees, this process is typically handled through automatic tax withholdings from each paycheck. Your employer calculates and remits the appropriate amount of taxes to the IRS on your behalf. However, as a business owner, the responsibility falls on you to manage your tax obligations directly. You're essentially acting as both the employer and employee when it comes to taxes. That's where estimated quarterly tax payments come into play. These payments are your way of fulfilling your pay-as-you-go obligation. They're designed to cover both your federal income taxes and self-employment taxes, which include Social Security and Medicare taxes. By making these payments throughout the year, you're essentially mimicking the payroll withholding system that employees experience. This proactive approach helps you avoid a potentially overwhelming tax bill come April, which can put a significant strain on your business finances. If you neglect to make these quarterly payments, or if you significantly underpay, you could face penalties from the IRS. This is true even if you ultimately pay your taxes in full when you file your annual tax return. The IRS expects timely payments throughout the year. The IRS expects to receive its share of your income as you earn it, not just after the fact. It's a matter of adhering to the established tax regulations. Think of quarterly taxes like paying rent for your business space. You wouldn't wait and pay for an entire year's worth of housing all at once, would you? Rent is typically paid in regular installments. Breaking down your total tax bill into 4 manageable payments makes budgeting significantly easier and more predictable. This approach helps keep your business finances on track and allows you to better manage your cash flow throughout the year. By embracing this system, you're proactively working to avoid potential financial crises related to unexpected tax burdens. Ultimately, understanding and adhering to the pay-as-you-go tax system contributes to building a more resilient and financially stable business. So, take control of your tax obligations, pay as you go, stay organized, and plan ahead. Your business finances and your peace of mind will thank you for it. First, determine if you need to make a payment. If you expect to owe at least $1,000 in taxes after withholding and credits, you're required to pay estimated taxes. Most established businesses meet this threshold, but new or low-profit businesses might not. If you also have a W-2 job, you can increase withholding there to cover your business tax. Just file a new W-4. The second quarter payment covers April and May income, due June 16, 2025. If your business had a strong spring, adjust your payment upward to avoid penalties. Review last year's tax return. If you owed then, you'll likely owe now. The IRS offers a safe harbor rule based on your prior year's tax, which we'll cover soon. Always check your current year's income to make the best decision. Once you've determined that you owe estimated taxes, the next crucial step is calculating the correct payment amount. This ensures you meet your tax obligations throughout the year and avoid potential penalties. The simplest and often most reliable method for calculating your estimated tax payments is the safe harbor rule. This rule provides a straightforward way to avoid underpayment penalties. Under the safe harbor rule, you can generally avoid penalties by paying 100% of the tax shown on your previous year's tax return. This offers a predictable benchmark for your current year's payments. However, there's a slight modification to this rule if your adjusted gross income, or AGI, was over $150,000. In that case, you'll need to pay 110% of your last year's tax liability. Then, divide that total amount by 4 to determine your quarterly payment amount. For example, let's say your total tax liability for the 2024 tax year was $12,000. This is the amount you owed after all deductions and credits. To meet the safe harbor rule, you would divide that $12,000 by 4, resulting in a required quarterly payment of $3,000 each quarter. Adhering to this safe harbor rule provides a significant advantage. It protects you from underpayment penalties, even if your income unexpectedly rises during the current tax year. However, the safe harbor method might not be the best approach if your business is brand new, or if you anticipate a significant decrease in your income compared to the previous year. In these situations, it's often more advantageous to estimate your current year's tax liability based on your projected income and deductions instead. To do this, carefully project your expected income for the year, then subtract all applicable business expenses and deductions. With your net income calculated, you can then use Form 1040-ES, Estimated Tax for Individuals, to calculate your expected tax liability for the year. This form guides you through the process of estimating your tax. Once you've determined your estimated annual tax, divide that amount by 4 to arrive at your required quarterly payment amount. This ensures you spread your tax payments evenly throughout the year. It's important to remember that for the second quarter, which typically falls in June, you need to ensure that your total tax payments made up to that point cover both the first quarter, Q1, and the second quarter, Q2 liabilities. If you discover that you underpaid your estimated taxes in the first quarter, perhaps due to unforeseen income increases, it's crucial to catch up on that underpayment in the second quarter. Making an additional payment will help you avoid potential penalties and interest charges. Carefully consider both the safe harbor method and the estimated income method, and choose the one that best fits your specific financial situation and provides the most accurate reflection of your tax liability. By staying proactive with your estimated tax payments and choosing the right calculation method, you can keep your business financially healthy and avoid any unwelcome surprises at tax time. Many businesses don't earn income evenly. Think landscapers in summer or retailers at the holidays. The IRS offers the annualized income installment method for those with seasonal or fluctuating income. This lets you pay based on what you actually earned each period, not just a flat quarter of your annual estimate. For Q2, calculate your income and deductions through May 31st, annualize it, and pay tax on that amount. If you had a slow Q1 but a strong Q2, your payment adjusts accordingly. This method requires careful bookkeeping and filing. Form 2210 with your return. It's more work, but it matches your payments to your cash flow. Worth it for variable businesses. Aligning payments with income helps you avoid penalties and manage cash better. Making your payment is easier than ever with the IRS's digital options. IRS Direct Pay lets you pay directly from your bank account. No registration needed, instant confirmation. The Electronic Federal Tax Payment System, EFTPS, requires enrollment but allows you to schedule payments and view your history. Prefer cards or digital wallets? Use IRS-approved third-party processors. just watch for processing fees. Traditional mail is still an option. Fill out a Form 1040 ES voucher, write your check to the U.S. Treasury, and mail it early to avoid delays. Choose the method that fits your workflow and keeps your records organized. Online payments are fastest and most secure, but the key is to pay on time. Always double-check payment details to avoid errors. Keep confirmation receipts for your records. Timely, accurate payments keep you in good standing with the IRS. The biggest challenge? Remembering the deadlines? Mark all 4 estimated tax dates on your calendar, physical, digital, or both. Set reminders. One to start preparing, another to pay a few days before the deadline. Use accounting software like QuickBooks or Xero to track income and estimate taxes automatically. Update your books regularly for accurate, stress-free calculations. Some software can even help you fill out forms or link to payment systems. Open a separate bank account for tax savings. Transfer a set percentage of every payment you receive. This ensures you have funds ready and keeps tax money separate from operating cash. Build these habits and tax time becomes routine, not a scramble. Organization and automation are your best allies. Miss a payment or underpay, and the IRS can hit you with penalties, even if you're due a refund later. The penalty is essentially interest on what you should have paid, calculated for each quarter you're late. Rates change, but penalties and interest add up fast, eating into your profits. If you don't pay by the April filing deadline, you could face additional failure to pay penalties and more interest. These charges compound, making it harder to catch up. The good news: penalties are avoidable with careful planning and timely payments. In rare cases like disasters or disability, the IRS may waive penalties, but don't count on it. Prevention is always the best strategy. Staying on top of quarterly taxes isn't just about avoiding penalties, it's about building a stronger business. On-time payments mean no nasty surprises, smoother cash flow, and less stress. You can focus on growth and customers, not scrambling for last-minute tax money. Financial peace of mind is a huge asset for any business owner. If you're unsure, seek help from a tax professional. A little advice can save you big headaches. Mastering quarterly payments shows you're a capable financial manager, not just an expert in your field. Follow the steps. Understand the rules, calculate accurately, pay on time, and stay organized. Embrace tax compliance as a positive business habit. The discipline pays off in healthier finances and long-term success. Take charge. Your business's future depends on it.